Now, from a Canadian economic perspective to an investing one, what should investors consider when it comes to the resilience of the U.S. economy and what it means potentially for interest rates from here? Let's bring in Josh Sheluk, portfolio manager at Verecan Capital Management. Josh, thanks so much for joining us this afternoon.
Yeah, thanks for having me.
So I thought that was interesting hearing again from the Bank of Canada governor what he was thinking yesterday about U.S. GDP and being more focused on Canada. But then we did get quite the number out of the U.S. today when it comes to GDP growth for the latest quarter. When you're looking at the reaction on markets today, I wonder what you made of it, because, I mean, equity markets were fairly positive. I mean, it's not a huge day when you look at the action out there. But what would you have expected going into this if that number, came in at the levels that it in fact did? Would you have expected more of a negative reaction, perhaps?
Well, it seems to me that the equity markets and the bond markets are focusing more on inflation prints than GDP prints over the last year or 2 years. So we saw bond markets react a little bit with bonds going higher and yields going down today, which seems, again, to suggest that they're focusing on the lower inflation prints than the very positive GDP prints. On the equity side, you'd expect that such a positive GDP print and a lower inflation print would have bolstered them a little bit more, but maybe it's already priced in.
Okay, yeah, that's interesting. So, I mean, when you're thinking about this sort of environment that we're in right now with inflation trending lower, though there have been some, bumps along the way here on the way down, and the U.S. economy still as strong as it is, are there particular areas that you would be steering towards right now when you're thinking about investment opportunities and, sort of positioning for this potential of rate cuts?
Yeah, I think if you go back and look at the last year plus of expectations for markets, so just reversing 12 months ago, we really thought, or the world really thought, that the world was going into a recession and it was going to be a very challenging environment. And that's turned out to be the complete opposite of what came to be true. And today seems to be very positive vibes out there and very positive expectations for markets this year, especially in the U.S. So our tendency would be to maybe fade that a little bit and to go against the grain a little bit more and look to areas that are a little bit more unloved. So we're finding interesting opportunities in things like utilities and real estate recently, which has, again, been an unloved sectors for the past several months or even a couple of years. We're
going to talk a little bit more about real estate in just a moment. But is there, a particular area that you think is attractive within the real estate realm right now, Josh?
Well, I think you need to be very selective because we still have some of the overhang of COVID affecting areas like office. But if you're very selective in the sector, I think you can find some good opportunities there.
Okay. And when you're thinking geographically, would you be, leaning more toward the U.S. right now with, the economic strength that we're seeing and leaning more towards U.S. equities? Or do you see opportunity in Canada too?
Opportunity on both sides, I think. We're fairly in line with where we would be on average for both those geographies. And the reason is, on the U.S. side, yes, economic strength is clearly more there, but the valuations are also much higher. So I think you have to look at this through a valuation lens as well. And in Canada, although the economy seems to be struggling a little bit more, on the valuation side, things look a lot more attractive.
When you're looking at Canadian equities, we have seen, real strength in the tech sector in Canada over the past year. Not really the one that people talk about the most. We usually talk about the Mag 7 in the U.S. in particular. But would you be looking at the technology sector in Canada? Do you think that there's opportunity there?
Yeah, certainly. It's such a small sector in Canada, and this is why investors talk about the U.S. sector a lot more than they do the Canadian one. So you have banner performance last year from a company like Shopify, which is actually one we've owned in our portfolio for some time, and that's going to really drag up the entire sector. So you have to be selective. It's not a sector in Canada that I don't think you can just broadly allocate to because it is so narrow.
Josh, great to get your thoughts today. Thanks so much for jumping on with us.
Yeah, thanks for having me.
That was Josh Sheluk, a portfolio manager at Verecan Capital Management.